If you're into day trading and you're trying to learn, I have a video that's going to break down some fundamentals on how you can actually become a day trader. There are some important things to know when it comes to day trading, so I'm going to break everything down in this video. So stay tuned and let's get it. All right, so in this video, we're going to go over some beginner trading stuff. The first thing that I want to share is I am a technical trader. That means I use technical analysis to basically mark up my charts and understand where the market is going based off of those patterns. So the first thing that I want to share with you is a candlestick, right? So these green and red things are candlesticks, and each one represents a specific amount of time. If you go over to the upper left-hand side where my mouse is, you're going to see all of these time frames. So right now I'm on the daily time frame, meaning this candle was moving up and down for a whole day before it closed, okay? So if I go over here to the right-hand side, right-click my mouse, and you see countdown bar, you're going to see if I go to, let's say, the 1 hour, it's taking a little bit of time, you're going to see that there is a little timer because this candle right here is moving up and down. Red means bearish, meaning price is going down. So we have 26 more minutes until this candle closes red or green. There's no other way. It's going to be red or green. And so I want you guys to know that candlesticks is basically what you're going to be looking at in the day trading life, right? So yeah, let's go over to the 4 hour and you're going to see a different pattern, but it's still on the same chart, right? We're still on the same currency asset, which is Euro JPY, the Euro dollar against the Japanese yen. So the same thing with this one, right? You're going to see that the 4 hour time frame, we have around 2 hours and 25 minutes and counting before this red candle closes. So that is a candlestick, and we're going to talk more about time frames now. Okay, so now we're going to focus more on time frames and why they're important. So I do have a different asset on the chart. We're looking at the Dow Jones Industrial. Those are the top 30 companies publicly traded in the United States. So we're going to go over that. So time frames, again, in Trade Locker, you're going to see the upper left-hand corner. You're going to see all the time frames. So let's go ahead and start off with the week, right? Again, to remind you, each candle represents 1 week of time. So right here towards the bottom, you're going to see that right here around this time, this was basically January of 2022. And then you fast forward all the way to the current times. This is September of 2024, right? So, a lot of time has passed on that weekly time frame, and you're going to see a little bit of movement to the upside, which is basically a good thing for the stock market, and we'll get into that later. But what I want you guys to know is there are different types of traders in the market. There are scalpers, meaning they're on the 5-minute charts, right? And they're looking for a lot of movement, because when you're basically on a smaller time frame, the candles are going to move a lot faster. So let's say, for instance, you have a higher risk tolerance. You can make whatever amount of money you want to make basically on that time frame, but you're also going to lose that risk. You're going to lose money a lot faster because the movement is much more volatile. Then you're going to get into more of an intraday trader or day trader. These individuals are on the 1 hour, 4 hour time frame. So again, the candles move much faster, but you're not in and out of a trade within 10, 15, 30 minutes. You're holding the trade within the day, right? So hence day trader or intraday. And so I like this version because it just kind of fits my personality, but you'll soon understand that day trading is really up to how you want to set up your day, right? If you want to wake up early, get on the 5-minute time frame, make a trade, make your money, and then go on about your day, you can absolutely do that. But if you want to not really stress out that much, maybe a swing trader is good for you. So you can go to the daily time frame and you can make a buy in April 24, right? And hold that position for a month or so and make your profit, right? So is it exciting? Maybe, but you're not going to have that movement going crazy where you're stressing out about losing your money. So, so yeah, I'll share some more breakdowns on the type of day trader you can be. But this is the main reason why you have these time frames. You can look at the big picture and see the overall trend, which is the market is going up in value, right? Meaning the stock market or the Dow Jones is overall bullish. So I can see that based off of the daily time frame, we're up and to the right. If I were to be on, let's say, the 30-minute time frame, you can't really see that trend. You see what I mean? It just looks like it's going sideways, right? And what I mean by sideways is, look, price is going up and down, and it's not really going up and to the right, right? So we want, if you want to buy an asset, you want the stock or the currency pair to go up and to the right, right? And so it's harder to see what the trend is when you're basically zoomed in on it like a microscope. You don't really know what's going on. So when you start trading, I would advise you to start looking at the higher time frames to get a good idea of what's happening in the market. And there we go. We got time frames. All right. So now we're going to go over some technical things. These are some real fundamental ways to understand what the market is doing. So first, we're going to learn support and resistance. So this tool right here is basically a rectangle. And what I'm highlighting for you is basically a channel. A channel is basically when price stays within a specific area, right? So think of a railroad where these are the train tracks, and then price is continuing to go up and down within that time frame. So support just means that you are drawing up the floor, right? So if you think of a floor, right, what happens when a basketball bounces off of that floor? It's gonna bounce back up. I just said that. So this is support, right? And how you can see if there is a confirmation. A confirmation just means a higher tendency of a price doing the same thing. So we have a bounce right here. We have another bounce right around here. And again, it doesn't have to be perfect because there's no such thing as perfect, but you're going to see three bounces where price came down, came back up, came down to this area, came back up, and came back down. So you want to look for three areas to confirm a support area. Same thing for a resistance, right? So if you're looking for a resistance, you want to confirm that there are three areas. So we have one right there, we have two right there, and then we have three right there. So again, this is a resistance, can't even spell, aka the ceiling, right? Because if you throw a tennis ball at the ceiling, what's going to happen? It's going to bounce off of the ceiling, okay? So we got that, and then we also have the support. Can't even spell. Why can't I spell? Okay, cool. So we have support and resistance. So now that we know support and resistance, we're going to go over trends. Trends is where you can make the money. All right. So what I'm going to do for you is I'm going to mark up a trend. This is a bullish trend. Okay. And what I did to actually highlight my tool to mark up a trend is I go over here and I click on trend line. All right. So again, you can have a support within a trend. It's the same thing. So this is the support. And again, this is the resistance or the ceiling. Okay. So how I want to identify, and I'm actually just gonna draw the support. So we have one touch point, we have two touch points, we have three touch points, and then we have four touch points. Okay. So this is a serious bullish trend. Bullish meaning it's going up and to the right. So I'm going to type in bullish trend. Okay. And then again, for the ceilings or the resistance, okay, if I can find it, oh, here it is. We have 1, 2, kind of sloppy, a little wild, but again, 3 because it comes back within the channel. So these are 3 confirmations on the support, 3 confirmations on the ceiling, and now you can actually make plays within this channel. Bearish trend is the exact opposite. So we're looking at a small bearish trend down here. This one isn't perfect, but again, there's no such thing as perfect. And what I want to do is I want to show you guys the support areas. So there goes 1 bounce, 2 bounces, and 3 bounces. And then again, that is the support area. And then this is the ceiling, the resistance area. So we have more than 3 confirmations per support and resistance area, confirming that this is a channel. Okay. So what I want to do is I want to rewind this a little bit. Oops, I need the premium program. But let's say price is right here. So I'm going to highlight that price is currently around this area. What a lot of people like to do is they get excited because price is going up in value. And so they're like, hey, it's going up, so I'm going to buy. So if you don't understand where your price is within a specific channel or a specific trend, right, you can be buying at the worst place possible because the likelihood of price coming back down is going to be a little bit higher, right? Because it's within that trend, right? It's bouncing off of a ceiling. It's bouncing off of a resistance area and vice versa, right? Let's say, for instance, people are seeing that price is dropping significantly within the 1 hour time frame. They might get scared. They might start selling their assets and they might say, hey, I don't want to invest into this asset anymore. I'm out. But if you can see that this trend is overall bearish, you can say you can have a higher probability of getting a win because you're buying at the bottom of the support and you know that price has a higher tendency of going back up within that channel to make you some money. Okay, so let's get into the fun stuff, how to make money. So there's a difference between day trading and investing. Investing is believing in a stock or believing in the financials, and you're investing over the long term. Day trading is about risk to reward, right? It's calculated. You're analyzing the charts and understanding that you have a high probability of winning this trade based off of your technicals. So I'm going to highlight this area and let's pretend that price is right here. Okay, I'm going to highlight it a different color. That way you guys can see it a little bit better. And we're going to, based off of history, based off of our technicals, we know that price came down and started coming back up. Price came down, came back up, and now price is right back at that support area. So I believe price won't go below this support based off of my technicals. So I'm going to put a stop loss right around here. Okay. So now I click on this plus button in Trade Locker and I hit TP. TP just means take profit. And so I'm going to put my take profit back around that resistance because I believe price is going to go back up right around that area. So now that I have that lined up, I can put in my risk. So let's say, for instance, I'm risking $100. That means my take profit will be $300. Okay. So it's really that simple. You don't have to be a rocket scientist to understand risk to reward, but it's really about understanding what time frame you're on, right? If you're doing a 3-to-1, right, on a 5-minute time frame, you can lose $100 within 20 minutes, 30 minutes. If you're on the 1 hour time frame, you can lose $100 within the day, right? If you're on the daily time frame, you can lose that $100 within the week. So, because you have to wait for all of these candles to play out, right? So, if I'm on the 1 hour time frame right now, right, it took me 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It took me probably a whole day for price to go from the support area all the way up to the ceiling, right? In order for me to make money. So, guys, really important that you guys understand that this is really important because that's how you make money. Again, you can make money shorting the market as well. It's the same exact thing. So if you find this video valuable and interesting, I can break some stuff down in the Discord group. Go ahead and join that. And again, this is a beginner tutorial on how to day trade. But if you're looking for a little bit more in-depth breakdowns, if you have a few more questions, go ahead and join my Discord. It's absolutely free right now. And I appreciate you watching this video.